Alright, this is going to be the second weekly commentary for the mentorship group, yeah? I'm going to do this one different. I'm just going to do this one how I'm gonna do it. I'm gonna do it a different way each time now, yeah? So the first one, it was kind of watered down because it was new, you lot new to concepts, but I'm just gonna do these ones now from now till the end of the mentorship. The weekly commentaries are gonna be this style, yeah? And it's gonna be way more beneficial. You're gonna see the style that I'm gonna do it in. So, before we get into this here, regarding the mentorship, what are we going over right now? We're going over a lot of higher time frame stuff, higher time frame analysis, and what I want you lot to do is forget trading live funds right now. Yeah. The reason why you lot are in the mentorship is because you lot have accepted the fact that you're not where you are, like where you went to, you're not where you want to be right now with your training journey, right? And I'm assuming that you lot have all accepted that you lot have submitted that it's going to take a lot of time to get good. And in saying that, the only focus I want you guys to have right now is getting the higher time frames right. What I mean by that is I want you lot, I want you lot to have educated guesses based off what I've taught you in the lessons, especially the last lesson. I want you lot to have educated guesses on the formation, where the weekly candle should reach to, and where the daily candle should reach to, and whether price action entails a bullish or bearish day. Every day I want you to study price and I want you to formulate an opinion saying that tomorrow is going to be bullish or bearish for this reason. Not just, I think tomorrow's going to be bullish, I think tomorrow's going to be bearish. For example, I think tomorrow is going to be a bullish day, or the next daily candle will be a bullish day because price needs to fill in a gap, or price is running into a high time frame order block, or price is running out buy stops, things like that. You need to have context behind what you're saying. You need to have context behind where you think the high time frame is going. Sorry, one sec. Got a cough. Um, Once you have kind of mastered where the high time frame is going, the low time frame things are easy. We will get into that. Yeah. Right now, I want you lot to focus on the formation of that daily candle and where it makes sense for it to go into. We will build up on the teachings. Each teaching on the higher time frame stuff will help you get a better understanding of where the daily candles should trade into. Yeah? So let's start the weekly commentary after saying that. Right now, I don't even expect you lot to trade live funds right now. I get it, you're all in a rush. I was there, trust me, I remember it. But the best thing you can do is save your money. Yeah, don't burn it on a live account. Get good. And you see the teachings I give you and the activities I give you, it's methodical. I'm doing it in a way where once you piece it all together, and by the end of the mentorship, when we've gone over it together and we can blend it together, it will all make sense why I've taught you in a certain way. Do you get what I'm saying? So let's start. Let's go on an hourly chart. So this is the DXY, and you don't know why we look at the DXY already. The DXY gives us our bias for anything that is traded with the pound. I mean the dollar. So what do we have here? Each day, yeah, each section delineates the trading days within the week. Now, let me just show you something. Remove it, add it. How much structure do these lines give? It shows you what each day done. Yeah, we're looking at time and price on a weekly level now. Remember, lesson 3 was talking about what? Time and price on a yearly level with the quarters. Now, In these weekly commentaries, we're always looking at time and price on a weekly level, the days of the week. So we have Monday, Tuesday, Wednesday, Thursday, Friday. If you're thinking why is Friday smaller, because Friday closes, the market closes, yeah? So my time is New York time, so the market closes at 5 p.m. New York. Now let's evaluate what happened on Monday. So we knew that this week was very bullish for the DXY, right? Now let's dissect it. Let's dissect of on how that weekly candle formed each day. So we have the Monday, and price made the low of the week on Monday. The low of the week was made. This is the lowest price that the market traded to for the DXY, that the dollar traded to within this week that just passed. As we traded lower, what did we do? We took out sell stops below here, and the market drove higher. Now, the market drove higher. What time of day did this happen? What time of day did this low of the week and the low of Monday, the day, happen? 3. Now, remember those times I told you lot on the Zoom session? What did I tell you guys? The times that you want to trade. New York time, 2 to 5 a.m. and 7 to 10 a.m. London time, that is 7 to 10 a.m. and 12 to 3 p.m. Yeah? So that's one time it happened. That's the low. Yeah? You're going to see that significant lows and highs within the day happen within these time zones. So price left a bullish order block, as well as a bullish order block shown by this one, this last down candle before this move. Price didn't trade back into it, so this is still floating around in the market. There's also this imbalance, yeah, from this wick. This body's candle has imbalance within it, so we have an imbalance line up with an order block. Price comes. This is now Tuesday. Again, what happens at 2? Yeah, the start of that time zone I told you. Price pushes up, takes out this high. Price comes down into this order block. Yep, this is also an OTE, I'm sure. Yep, price comes into that order block, and what do we find? We find a support level. Support and resistance. How retail see it and how we see it is different. We like to see support at these order blocks. Why do we show it? Why do we like to see it? I mean, because it shows that the algorithm is respecting this order block. It shows that. What did I say in the last lesson? If you're bullish, what should you see being respected? Down candles and lows should be respected. Order blocks and lows should be respected and not violated. What should we see be violated instead? Highs be violated instead. So we find support here. This is good. We touch it again. And on Tuesday, we just float around inside of it. We create this equal tops going into Wednesday. And we drive down again into the order block, and we take out the buyers here as well. And then we trade all the way up in here. And now Friday, I know I sent out a trade on Friday, or a trade idea on Friday, and it didn't go as expected. That happens, yeah? I don't claim to have a 100% win rate. I never have. I don't think I'll ever have it. But what did I say? Friday is usually what? After Thursday is a large range day. Friday usually does what? A day of reversal. You see that Thursday created the high of the day, the high of the week, I mean. And that is very common. Add that to your notes. That is very common in a bullish week. Thursday is commonly the day that caps the high of the week on a bullish week. And Friday will retrace back into the weekly range. Just on the 4 hour. Remember we had this target on the daily. Remember we were expecting price to trade above here. And price absolutely smashed that target. And then now we're retracing. Yeah. What I'm seeing price wanting to retrace into is we have this. If we go on to 15-minute, we have this little volume imbalance that price does need to fill. So when price gets it, I want to see how price is reacting around this region. If we go on the 1 hour, it's there as well. There's this, yeah. Talking about the DXY, this week we have a very significant week. I don't recommend to trade this week. I probably won't be trading this week. If I do, I'm going to half my risk. The reason being, we're entering a new quarter and it's NFP week. The non-farm payroll comes out on Friday. Let the gamblers trade the non-farm payroll. We sit from the sidelines and we laugh at them. That's what we do. They might win one or two, but they won't show the real losses. Trust me. They won't show the real losses that happens on NFP. They open many positions. People do that. They open a buy and a sell. Of course, if you open a buy and sell, one is going to win, right? Now, NFP, you will see how price action behaves before the NFP event happens. Price will go in a very tight range, and usually it takes out both sides of the party. The buyers and the sellers get taken out. That is something you don't want to trade because the move can happen very fast, and you don't want to get caught on the wrong end of it. It's just not worth it. There's so many other days to trade after the NFP. We want to see how this NFP will be used as a catalyst going into the next quarter. We want to see if it's going to lead to a quarterly shift. Because on the DXY, what do we have? We want to see if we are actually going to trade above this high. If we come lower and we start trading around here, this, if this low gets broken on the DXY, we will see I am expecting lower prices and I will shift my bias to become bearish. This last down candle is an order block. This is also something called a rejection block. We have a small, tiny imbalance within this candle. It's very, very tiny, but it exists. Yeah? The high of this candle comes in at 022. The low of this candle comes in at 037. So we have a tiny, like a pip of an imbalance, but do not underestimate that 1 pip imbalance. Price will come back for that. Believe me. So that was the DXY. Now let's consider how Euro USD wanted to trade. So this is how my chart lined up. Monday opens. price goes and takes out some highs before moving down lower and taking out the sellers. Simple, right? You have an OTE from this high to this low. Price comes back. Now, when this happens, I know you're saying, but what does this retrace into? This just retraced into here. What you need to do, sometimes there is a time disparity between the DXY and Euro USD. If we look at Tuesday, yeah, Tuesday early. So Tuesday at 5. We're looking at Tuesday 5, yeah? Stay with me, this is very important. Tuesday 5, Euro USD. Tuesday 5. This wick, what does it go into? In the DXY, I'm on the Euro USD, doesn't look like it goes into anything. But on the DXY, it goes into the order block. When it goes into the order block on the DXY, you expect a reaction on your Euro USD as well. Although it may not be as clear on the Euro USD, this is why we got this reaction at 5 a.m. New York time. So this would be 10 a.m. London time. We got this reaction, this wick here, because the DXY at Tuesday 5 a.m. New York time reacted off the order block here. It's not by chance. The Euro USD didn't just decide to wick off there because it's quote unquote resistance. No, the DXY reacted off a bullish order block. Therefore, we become bearish on the Euro USD once we get rejection from there. Now we trade lower and we trade lower. Now, what we have here, this is a breaker block. This down candle here is a breaker block. Now, we're going to touch on breaker blocks as we go through the mentorship. We're going to have one whole lesson dedicated on it. This is specifically one of the setups I trade as well. What we see here on the Euro USD, a high, I'm seeing this. This is probably seen as a bull flag to retail. Price goes up again and makes a failure swing high and it breaks down lower. It breaks this low. The last down candle of that low, we look at that as our breaker. This candle is the one that breaks below the low. Look at how this candle perfectly trades into the breaker. And then we reject off of it. When we reject off of that, there's more downside. What does this down candle leave? An imbalance. Yeah, it leaves an imbalance. Now, this is the end of the imbalance. So from here to here, the body, we have imbalance. Yeah. So remember how I told you, how do you see imbalances? When you want to sell off an imbalance, you want to sell at the 50 or above on the imbalance. Remember, you can apply discount and premiums to a lot of things. One of them is imbalance. You view discount and premiums within imbalances as well. This candle, surprise, surprise, again, within the 2 to 5 a.m. time zone, retraces into it, makes the high of the day on the Thursday, and we trade lower. We trade lower, and this takes out this low that we wanted to see get taken up. This is currently sitting at 11064, and now we're seeing this retracement back up on Friday. We saw that Friday was indeed a day of a reversal, which is common. We want to see where the euro wants to go. Right now, I'm sitting on my hands and I'm waiting for price to tell me where it wants to go. We are coming up to a new quarter. We rejected heavily. We rejected heavily and we didn't manage to keep under here. It could be that price wants to fill this gap, maybe react off this order block, and we see a move lower. That could happen. Yeah. If you look at the weekly, it is pretty sideways as well. However, I see price coming and trading below these lows ultimately. Ultimately, I want to see price get to this big figure, 1.08. Don't be thrown off by wicks all the time. Don't think that's always a heavy reaction. It depends where the wick is reacting off of. Yeah. We have this imbalance that I want to see get filled. Ultimately, that's what I want to see price trade to. If we just remove this, we can see that price still has not filled that imbalance. Before any move higher, I want to see the sell side targets get hit before we want to see moves higher. Yeah, that's what I'm anticipating on the Euro USD. Once you put all of the days on, so I say change your time to my time, UTC -5, which is the New York time, and it's very beneficial if you do so because the mentorship is going to be based off those times because we're going to start considering time very heavily soon. Just as a study, I want you lot to do. Go onto the Euro USD pair and find where the significant highs and lows. I don't mean all the highs and lows. I mean the significant ones. Like this is a significant one. This is significant. This is significant. This is significant. This is pretty significant. And this is significant. 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 The ones that stand out, yeah, on the 1 hour or the 15 minute, and make a note of what time that happened in. And let me know the results you get. Before I wrap up this video, I want to say one thing. Stop trading so many pairs. I don't care if it's crypto or forex. Stop trading so many pairs. You lot see I only trade what? Euro USD, GBP USD, and I use the DXY and Euro GBP as directional biases. The more pairs you have, the harder you will have and the more time you'll spend on the charts. Could you imagine me doing this for like 10 pairs? Do you know how much time that will take me? I just need one pair. Just give me one pair. Give me Euro USD. Take GBP USD off the thing. I don't need that. Give me Euro USD and that's all I need. Yeah. Of course, if it goes sideways, I'll look to the futures and find a cross pair that will give me a nice trade. One thing that a lot of pairs lead to, or trading a lot of pairs leads to, is over trading. And you can't keep up with all the pairs. They don't all move the same. It's such a headache when you trade so many pairs. I want you guys to pick, if you're in Forex, pick two pairs. I'm saying, do me, Euro USD, GBP USD, and use the DXY as directional bias and Euro GBP. Yes, it might be more boring because there might not be so many trades, but guess what? It eliminates. It eliminates over trading, which is one of the biggest killers. It's not every day a trading day. It's not like that. You want to take the clear and obvious setups, the ones that are so obvious that are just jumping out at you. Those are the ones that you want to take. I feel like I used to trade so many pairs. What I used to do, I used to look at GBP and then every GBP pair and every Euro pair. That's like 15. Yeah. And it was such a headache and I never really had success with it because I'd be looking at so many pairs and it's just like I'll look at one pair and be like, oh my God, I missed this trade because I just was looking at something else. Euro USD, I know exactly where it's going. I, I always tell you lot what high I'm expecting to get taken out, what low. Imagine that for like 10 pairs. You won't be able to do it. Your life will be on the charts. And that's not what you want. Look at a few pairs. If you're a crypto trader, look at two cryptos and just get in line with it. Get in line with the order flow with that pair or that crypto. And that's it. You just need to be in flow with one and you can make money. And yes, some pairs give more pips than others, but it comes back to risk to reward. For example, yeah, look, on the 1 hour USD 56 pips. Let's say so something like that is 19 pips, yeah? 19 pips for 56. If I go GBP USD, it's gonna look like a lot more. Yeah? 34 pips. But guess what? It's all about risk to reward. Yeah? That's all it's about. It's all about risk to reward. What I mean by that is you have someone that risks 100 pips to make 100 pips. That's a 1-to-1. What about the guy that risks 5 pips to make 10 pips? That's a 2-to-1. Who trumps who? The 2-to-1. The pips. Don't get obsessed over pips and percentage. Everything is a risk to reward. Even a 1 pip for 2 pip, hypothetically. That's still a 2-to-1. Yeah? So I hope this one has been beneficial. Also, you see how the DXY made the high and the low of the week? It's just the opposite for the Euro USD. The high of the week was made on the Monday, and the low of the week was made on the Thursday on a bearish week, which is very common. And we'll be going into that in the mentorship in very, very good detail. So this is the weekly commentary for the second week of the mentorship. Any questions, ask me. If you want to know the times that I set my charts to and that I look at, hit me up and I'll let you know. Yeah? So I'll catch you guys in the next one and have a good week, the end of the week, and so a good Sunday, bro.